So hello, good day. For today, I'm going to report and discuss the financial analysis of Starbucks Company for the year ended December 31, 2019. This is the financial data of Starbucks. Let's go to the financial ratio of Starbucks Company. Liquidity ratio is a type of financial ratio used to determine the company's ability to pay its short-term debt obligation. First is current ratio. To get the current ratio is equals to current asset over current liability. In 2019, we have the current asset of 5,653,900 over 6,168,700. In 2018, and the result is 0.92. In 2018, 12,494,200 over 5,684,200 is equals to 2.20. Current ratio is simply the ratio of all current asset to current liability. The result should always greater than 1, which would explain that there are sufficient assets available to pay its liability. The quick ratio. To get the quick ratio is equal to current asset minus inventory over current liability. In 2019, 5,653,900 minus 1,529,000 over to 6,168,700 is equal to 0.67. In 2018, we have 12,484,200 minus 1,400,500 over to 5,684,200 is equals to 1.95. In cash ratio, it is a liquidity measure that shows a company's ability to cover its short-term obligations. So cash ratio is to cash over current liability. In 2019, you have 2,686,600 over 6,168,700 is equals to 0.44. In 2018, they have 8,756,300 over 5,684,200 is equals to 1.54. The activity ratio shows the overall liquidity position of the company has decreased from 2018 to 2019. The current fiscal year position of the company reflects that company not having enough cash and current asset to pay its current liabilities. The company does not have strong liquidity position to deal with its short-term obligations. Activity ratio. It's a type of financial metric that indicates how efficiently a company is leveraging the asset on its balance sheet. Inventory turnover. Because cost of goods sold over inventory in 2019 they are 19,468,900 over 1,529,000 is equals to 12.73. In 2018 they have 17,367,700 over 1,400,500 is equals to 12.40. In receivable turnover naman, measure how many times a company receivable are converted by cash in period. Net sales over net receivable 26,500,100 over 879,200 equals to 30.15. In 2018 naman, 24,719,500 over 693,100 is equals to 35.67. Total asset turnover equals to net sales over total asset equals 25,508,600 over 19,219,600 is equals to 1.38. In 2018, 24,790,500 over 24,156,400 is equals to 1.02. The activity ratio shows a decrease in the performance of a company from 2018 to 2019. The decrease indicates that assets are not having used effectively or for the generation of sales. The management needs to revise its business policies and must effectively use its asset. Solvency ratio, debt ratio. The debt ratio is total liability over total asset. In 2019, they have 25,450,600 over 19,219,600 is equals to 1.32. In 2018, they have 22,980,600 over 24,156,400 is equals to 0.95. Time interest earned ratio. It is a number that shows how many times a company could cover its interest charges with its pre-tax earning. In time interest ratio is equals to EBIT over interest expense, 4,797,200 over 96,500 is equals to 49.71. In 2018, they have 5,950,300 over 191,400 is equals to 31.09. The debt ratio is increasing from 2018 to 2019, and that shows management is using more of debt to run its operation activities. Moreover, the times interest ratio has shown that management has earned more of EBIT against its interest income in the current fiscal year. It shows a moderate sign and health for Starbucks management. Yung sa profitability ratio naman, it indicates how efficiently a company generates profit and value for shareholders. In return on equity, net income over total equity, 3,599,200 over 6,232,000 is equals to negative 0.58. In 2018 naman, they have 4,518,300 over 1,169,500 is also 3.86. Return on asset. Is a profitability ratio that provides how much profit able to generate from its asset. Net income over total asset is equals to, in 2019, 3,599,200 over 19,219,600 is equals to 0.1873. In 2018, you have 4,418,300 over 24,156,400 is equals to 1.870. Profit margin. Net income over sales equals to 3,599,200 over 26,508,600 is equals to 13.58%. Ang kanyang profitability margin. In 2018 naman, 4,518,300 over 24,719,500 is equals to 18.28 sa 2018. The return on asset is negative in the current fiscal year, and that shows a negative sign for the investors as they are losing more money against the investment being made in the Starbucks company. The return on asset is less than 1 in all financial years, and that shows the management is not working properly for the generation of revenue with the help of its asset. The management needs to utilize its asset effectively. The profit margin of the company has decreased, and that shows management is not generating enough sales and has poor control over its overwhelming overhead expense. That's all. Thank you.